Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Tata Global Beverages, one of the marquee stocks of the current stock market, and has run up around 60-70% already this year. So let's understand what's cooking and what needs to be done in this share. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about the company. The company was established in 1964 and they provide coffee beans for major clients like Starbucks, etc. And Starbucks have opened up their businesses in Bombay in a couple of places, and also are planning to start up more businesses in Delhi NCR region. So it's going to be an expansion, and they provide exclusively to Starbucks showrooms raw coffee beans. Also, they provide coffee beans to different hotels, etc., and also tea. They have a number of tea estate, and there has been a restructuring of the company that has taken place over the last 18 months, and due to which it has become a pure FMCG company than just providing a coffee bean company. So they're going to market their products with a brand name, etc. And Tata Global Beverages itself is going to be a brand over the next 3 to 4 years, and that has led to the re-rating of the stock from being a commodity company to a brand company to a consumer company. And we see the share trading at 50-55 times earnings at the moment. It is one of the few beverage companies that are listed. We have Varun Beverages, which provides bottles, that is listed. We have Manpasand, which is listed but has really disappointed investors, and then there is Tata Global Beverages as well. Looking at the financials of the company, well, the sales were up around 4.2%. So nothing too good to write home about for this second quarter. But the first quarter was really good. But the second quarter of FY20, we had a PAT growth of 15% year on year and a sales growth of 4%. The company is totally debt free, and this is really good. And the reason for the lower numbers, because the expectation was of a 25-30% increase in profits year on year. Lower numbers were because of lower other income and higher interest cost, and this is a cause for concern that the interest cost has increased year on year when I looked at the numbers, rather than reducing. So although the company is debt free, there's slight debt on the books, and probably that will go away by the end of FY20 or early part of FY21. That's what the company has said. The profit could have been flat unless there was a tax cut. So the tax cut helped the company shore up the numbers on the profit front, and the profit increased sharply year on year by 15%. Otherwise it would have been flat. The operating profit margin is decent at 12%, but the return on equity is around 5 to 6%, which is not quite stupendous to see, say, for an FMCG company. Looking at the performance of the stock, it has moved 70% this year, so it is around 310, 315 rupees. It's around 75% up from around 180, 190 rupees that was trading at a year back. Came out with outstanding Q1 results, as I said, but the Q2 results have been flat, but overall doing well compared to a couple of years back. The tax cut, as I mentioned, has really helped the company, and probably for the next 2 quarters the numbers would be good because of the tax cut, and we'll see what happens in FY21. We could have a situation where the numbers are swelled up because of the tax cut, and probably FY21 might not be that good, and so the valuations might seem steep at the moment. So we have to see what happens in FY21. Top investors are buying, and this is really good. When I look at the shareholding pattern, FII and DIIs have bought over the last year or so a lot of shares, and that is a sign of strength for a company, because these stocks will stay in the closet for a longer period of time, and that won't be traded on in the market. So there'll be less number of shares that will be traded on daily basis in the market, and that would help the stock go up. After restructuring, the expansion of the stock has taken place. So there has been a PE expansion and a restructuring. After restructuring, the PE of the company from being 2022 times have gone up to 50-55 times at the moment. So the question is whether you should buy the stock or not. This is the major question. Well, I believe that the valuations are steep, and let's stay with this for a moment. I believe that the valuations are steep at 52 times earnings, current earnings. I believe let it go to 35 to 40 times earnings, which it could go to if probably in a year's time, because I feel the numbers might not stay the same after 3 to 4 quarters. Probably the next 2 quarters could be good and it'll continue to trade at 50-55 times. But there will be correction on in these stocks. There will be correction in stocks that have run up over the last year and a half, and you could have the stock trade at around 100 DMA or between 100 to 200 DMA. Probably buy at that time. I think a good 25% correction from say 330-340 levels would be a very good price to buy it. That would be around 250 rupees, so around 240-250 would be a very good level to buy this stock here. I still believe that there will be corrections because of the steep valuations at 55 times. It could be a very good long-term plan. We could see a consistent 18-20% growth in the stock over the next 6 to 7 years, because the company is now going towards making it a brand and being an FMCG brand rather than just being a supplier of coffee beans that it was before. So, not a commodity company, it will become an FMCG company in the years to come. So, over the next 5 to 7 years, it is a very good buy, but you have to buy at reasonable pricing. So, suppose you buy at 330, you'll stay with the company at loss for a year and a half if the stock doesn't cross 330 over the next 18 months. So probably buy in tranches, buy on declines, buy on major declines when it falls 6-7% on a day, or it falls 12-13% in a week or 10 days. Then you buy a bit and then buy on every decline, and only buy 5% of your holding, because it is just a 20,000 crore company. And we have seen with other companies, although I'm not painting everything with the same brush, but we have seen with many companies which looked good, in which the management looked good and everything, although there's a Tata management backing, but still you have to be careful with what has happened with all the mid and small cap shares, and buy only about you can say 5% of the total holding that you'll have in the portfolio, so that if you lose it you won't get hurt. There has been a stable dividend record, and this is pretty good and this has been for all the Tata group companies. What I have found over the last 7-8 years with the Tata group company, that they have not yielded shareholder growth to an extent that other groups have, like the Adanis or Ambanis, etc. And probably this stock might change things over the next 7 to 8 years rather than others like Tata Motors, Tata Steel, etc. This is a more simpler business compared to those, and probably you can invest, but buy only on declines. So this was my video on Tata Global Beverages. Please like and subscribe my channel, hit the bell icon so that you can get my video straight away when I post it. If you have any request for any stock, kindly put it in the comment box and I'll surely put up a video in the due course of time. Thanks a lot for watching.